Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The dollar weakens as markets brace for election volatility. The latest U.S. poll showing no clear advantage for Kamala Harris or Donald Trump. The candidates are making last-minute pitches in sweeps across key battleground states, seeking a way to find an edge ahead of polling day. We'll discuss the market's playbook around the election with Eastspring Investments CEO Bill Maldonado joining us exclusively, and they call him the election Nostradamus. The American University's Allan Lichtman has called 9 of the last 10 presidential votes correctly. He'll be with us to explain why he's seeing a Harris victory on Tuesday. So is it going to be Trump or Harris? The U.S. presidential election is the main market risk we are watching, especially with polls still showing a tight race between the two candidates. Voters head to the ballot box on Tuesday, but Bloomberg Economics thinks it will take us as long as 2 weeks to determine the outcome. Here in Asia, China's top legislative body is meeting under the shadow of that election. Lawmakers in Beijing are expected to sign off on a fiscal stimulus package that's set to run into trillions of yuan. But for investors, the suspense of the pacing and the targets of the stimulus has been unnerving. Well, first, let's get more insight into how tight the race is between Harris and Trump. Let's bring in our Atlanta bureau chief, Brett Pulley. Brett, just last week, markets were pointing to a Trump victory. They were confident. We saw how Bitcoin surged, but today, not so. No certainty. The thing really is, it is neck and neck.
Oh, there's no doubt about it. This thing is really, really tight. And yes, some recent polls have come out over the last day or two that shows that maybe some of the undecideds are breaking in Harris's favor, but it's so tight, we just don't know. And both candidates, particularly here in Georgia, have been battling it out in the final days. Donald Trump was here in Macon on Sunday, and Kamala Harris in Atlanta on Saturday. So once again, Georgia is poised to play a pivotal role in the presidential election as one of the swing states. And already voters here have, during early voting, cast almost 4 million votes. And that's out of 7.2 million active voters in the state. So Tuesday will be the day. And some people expect that because the early turnout was so strong, that the polls may be quieter than usual on Tuesday.
So Georgia is key. What about the undecided voters? We're talking about a very tight race. 1%, they say, still undecided. How key is that?
Well, the undecideds are critical. There's no doubt about it. Here in Georgia, we've seen some really targeted efforts at going after key blocks of purportedly undecided voters, male voters, really black and white men have been largely targeted through advertising by both campaigns here. And in fact, the Atlanta Journal-Constitution, the local paper here, estimates that in the final 7 days of the race alone, the two campaigns will have spent a combined $24 million just in Georgia.
We know that 70 to 80 million voters have already cast their votes. Put that in perspective for us. What does it necessarily mean for either Harris or Trump?
Well, it's interesting. I guess time will tell. I think early on during the early voting period, there was an indication that it was favoring Republicans of a pretty strong turnout. I don't know if that's been the case as the early voting has gone on, but there's no doubt that turnout, large turnout, typically leans in favor of the Democrats. And it looks like we may be on the verge of really record turnout again this time. I think that we've been through such a tumultuous election season, with a couple of assassination attempts, with the change in the Democratic ticket at the top, et cetera, that I think a lot of voters, and I found this when I talked to people who voted early, some people just wanted it to be behind them. So we're almost there.
Brett, thank you so much for that. Atlanta Bureau Chief Brett Pulley there. Now, as you mentioned earlier, China's top legislative body is meeting in Beijing this week as investors watch for any approval of fiscal stimulus to revive the economy. For more, let's bring in our China correspondent, Min Lo in Hong Kong. Min, we know that a lot is at stake. Give us a preview of what can be expected.
Yeah, well, if you look at the stock markets today, things are still slightly on the upside. And I guess there is expectation that the government is going to deliver on some form of stimulus. I believe the market consensus now, at least for this year, is about 2 trillion yuan in additional stimulus, although market expectations are ranging from between 6 and 10 trillion yuan in terms of a multi-year stimulus. These would be in the form of additional bond issuance to help tackle local government debt and also to buy up some idle properties and land as well. But I think the big wild card here is whether there will be stimulus targeted directly at lifting consumption, stimulus measures that are beyond what we have seen so far in terms of that equipment upgrading, that cash for clunkers program. When it comes to the stimulus for tackling local government debt, I think what's key to watch is whether the bond issuance will be coming from the central government or the local government, because if it's local government issuing bonds to refinance their own debt, then that essentially really isn't really any form of fiscal expansion at all. It isn't really the same as injecting new money into the economy. But if it's the central government that is issuing those bonds, then I think that will be welcomed by the markets because it would show that the central government is now taking on more debt burden from the local governments.
Min, of course, this is happening at a time when we're also keeping a very close eye on the U.S. election. Might a Trump or Harris administration impact growth? Who is better for China's economy?
Yeah, I think at this current moment in time, the stimulus measures, those are a bigger factor that is overshadowing the U.S. elections. But of course, there's no doubt that whoever comes into the White House will have a huge impact on U.S.-China relations and on the economy. And so our Bloomberg economics team have crunched the numbers with some modeling. And if we look at a Harris win scenario, that could lead to more of the same, more policy continuity, and if we see a limited decoupling happening, that could lead to GDP growth being dragged by about 0.4% next year. But if we see a more serious sort of decoupling, it could be as high as a 1 percentage point drag on the GDP. If we look at a Trump presidency, though, his pledge to impose 60% tariffs across all goods from China, by some analyst estimates, that could also drag on growth by about 0.4 percentage point. But if we see a global retaliation against these tariffs, that impact could be mitigated. And of course, China would be prompted to strengthen its supply chain resilience, to divert more of its trade to other neutral countries, and also double down on its self-sufficiency push when it comes to technology.
Min, we know that Trump has a friend in Elon Musk, and China has a friend in Elon Musk too. Might a Trump win be beneficial for China?
Yeah, well, this is a very interesting conversation because Musk is emerging to be this potentially very influential character because he is one of the biggest donors to the Trump campaign. He has donated over $100 million to Trump, but at the same time, he also has immense business interests in China. Obviously, the Tesla Gigafactory in Shanghai, which makes more than half of Tesla's EV globally. Elon Musk is someone who has had close interaction with the top leadership of China, including meeting with Premier Li, for instance, when he was seeking to get approval for his autonomous driving system to be used in China. So if Trump wins, he could emerge as an interesting interlocutor when it comes to U.S.-China relations, especially given that Musk has made some interesting comments, especially when it comes to Taiwan. He's quite aligned with President Xi there, saying that Taiwan should effectively be under China's control as a special administrative region. He's also obviously opposed to those EV tariffs, and that is a significantly different stance from what Trump has said, which is that 60% tariffs across all goods there. So we'll have to see if he might emerge as that one person who could whisper in the president's ear.
That's right. We have to wait and see. Bloomberg's China correspondent Min Lo, thank you so much for that. And aside from the high-stakes election in the U.S. and China's NPC meeting, markets are also bracing for several rate decisions, including one from the Fed. Economists expect the Federal Reserve and the Bank of England to each cut rates by 25 basis points. We also hear from the Australian and Malaysian central banks, both of which are expected to stand pat. While still to come, we'll speak with a historian who has correctly predicted the outcome of 9 out of the past 10 U.S. presidential elections, the reasons why he's forecasting a Harris victory just ahead. But first, we discuss market risks with Eastspring Investments as election anxiety grips investors. Our exclusive interview with CEO Bill Maldonado is up next. Keep it here with us. This is Bloomberg. Welcome back. Some investors seem to be re-evaluating their bullish bets on the dollar, which was long favored as a prime play for a Donald Trump election victory. Avril Hong joins us with more on why that is and how markets are also keeping a very close eye on China. Avril.
Absolutely, Haas. I mean, we have the latest polls showing that it is too close to call. Neither candidate in the U.S. presidential election has a clear lead. And amid all this, at the start of the trading week, we are seeing traders repositioning. Remember, recent weeks, what we've been seeing on the so-called Trump trade is the positioning on the dollar that has hit levels we haven't seen since July. Similar picture on treasuries as well. The Trump trade, of course, involves long dollar and short bond bets, concerns about looser fiscal policy, along with tariffs, what's that going to mean for borrowing needs of the U.S. Today, what we're seeing is a pullback in the U.S. dollar based on the Bloomberg Dollar Index. It is losing ground against the yen, against the Aussie Treasury futures, also catching a bit. But as you say, it's not just about the U.S. but the board. Take a look at what we're seeing in China. To be clear, we are seeing the CSI 300 clocking weekly declines. But today, the focus, as it's going to be for this week, is about China's NPC. And it's really interesting to see how China margin debt has been climbing to levels we haven't seen in 2 years. So to some, this represents that traders are boosting risky wagers. They are perhaps seeing this week as a window for stimulus to be announced, for market intervention, and we have even the likes of Goldman Sachs that I think see a 20% upside for Chinese stocks. Haas.
Big week for markets, and you know what? When it comes to that election, it's so tight. How do you even position? Let's bring in Bill Maldonado, CEO at Eastspring Investments, an Asia-based money manager handling assets of around $247 billion. Bill thinks a clean, democratic sweep of the House is an unlikely outcome, but if it happens, it may be negative for U.S. growth. Bill, good to have you with us.
Hi, Haslinda.
You say, well, if it's a democratic sweep, it's going to be negative. Some people said just last week to us that if it's a Trump win, it's negative. It does look like it has to be a gridlock, then it is a positive.
Well, look, I think the first thing is, as an investor, as Avril's just saying, it's impossible to call at this point. But to make it even worse, I don't think we really know what the impact of either a Trump presidency or a Harris presidency would really look like. We've heard Trump talking about tariffs and other measures, but do we really know what's going to get implemented in what manner? So it's almost impossible to position for it at this point. Certainly what we've seen historically is that when you have a more neutral administration with the Senate and the House being in one direction and the presidency in another, that tends to be relatively benign for markets. So that might be the easiest outcome for markets to deal with, but at this point, I think we just don't know.
So what do you do, Bill? Do you stand pat and wait till there's clarity on what the outcome is before positioning, or what are you positioning for?
Well, I think there's plenty of things you can position for. I think you've been saying today on your shows that all eyes are on the U.S. election, but I think there's actually an article on your front page that is saying maybe not all investors' eyes are on the election because there's plenty of other things going on around the world. So of course, as an investor, you have to watch it, know what's going on. But I don't think specifically positioning for the outcome of the U.S. election in either U.S. equity or U.S. bond markets is really something a lot of people are going to be doing in any size at this point. It's just a coin toss at this point.
Whether it is the U.S. election or whether it's the Fed, Treasury's in focus, though.
Yes.
The big question is where yields go from here. And some
Absolutely.
say, when you talk about spending by the U.S. government, either Trump or Harris, that fiscal deficit come into focus and makes you wonder where the yields go from here.
Well, it's interesting you say that because, I mean, the U.S. fiscal deficit has been increasing and increasing and increasing for the longest time. And I remember 15 years ago, 20 years ago, that was a big focus for markets. That was a big focus for currency markets, for bond markets. Investors seemed to be really interested in it. But now the deficit is only going one way. None of the political parties are really talking about doing anything about reining in that deficit. And yet the market seems relatively unbothered by it. And by the way, that doesn't seem to be just a US phenomenon. You could say the same thing for other economies as well. So I'm not sure how much of a focus it's going to be post-election. Maybe it's going to be one of those things, the old saying about, how did you go bankrupt? Well, it was very slowly at first and then all of a sudden. Maybe we'll get a sudden focus on deficits again like we did just post the GFC. But it's very unpredictable about this point. Again, what is the bond market really going to focus on? Is it going to be inflation? Is it going to be the deficit? Is it going to be the...
But is it fair to assume yields are headed higher post-election? If a lot of the moves are inflationary, you would expect yields to head up.
That's a really big if, though, Haslinda. If a lot of the moves are inflationary, I think we're making a lot of assumptions at this point. Let's not forget that the underlying U.S. economy is probably softening at this point. If it wasn't for the election and new policies and things like that, we would be much more likely talking about continuing to see a decline in inflation, which I think we are, but also along with that, a little bit of a deceleration in the US economy, particularly the labor market. So I think it's going to be a tug of war between what we're assuming specific candidates are going to do and what the underlying economy is doing and can bear. So I think that's also too close to call at this point.
If the U.S. election, or rather if the U.S. economy is softening, would you be looking at perhaps emerging economies in this part of the world where growth trajectory is actually quite healthy and in the longer term is likely to do really well?
Yes, I think potentially. So if you look across Asia, you've got China. I'm sure we'll talk about China specifically in a bit, but it has its own issues which are completely separate from what's going on in the US. You have North Asian economies like Japan, Hong Kong, Korea, Taiwan that are more linked to the US economy, more dependent on exports to the US economy, high value exports. And then you've got ASEAN, which is relatively more insulated. You've got big consumer economies like Indonesia. You've got India as well, which is more of a domestic.
But of course, emerging markets have lagged since 2010. Is it any different this time around?
Well, so I think talking about the entire emerging markets complex now is very, very difficult because look at what's happened to emerging Europe. Look, Russia was a huge, huge part of that. Now not investable. Look at what's happened in Brazil and Latin America. So
if you buy EM, you buy India.
I think you have to be much more selective within EM, and I think Asia is the sweet spot. And let's also not forget that EM these days is 70% Asia, just because of the way markets have performed relative to each other. So if you're talking about EM, are you really talking about a more Asia-centric view? I think for a large part you are.
Would you be buying China now?
I would. I think that we've seen a clear signal from policymakers in China. I think we have seen the point at which there will be something akin to a put coming into play. We're very used to seeing the sort of Fed put. We've gotten very good at predicting when that will come in, you know, what level it's at, what level of pain they're prepared to tolerate. And I think we've seen that in China now. Initially, investors were very, very happy with what they were seeing, particularly from the PBOC in terms of stimulus. And then they were a bit less happy that there was not sufficient fiscal follow-through in the eyes of most investors. I think what we always have to remember for China is that policy measures are going to be much more gradual, much more gradualist than investors like to see, and than that we're used to seeing in economies like the US and Europe, where you get a big bang announcement and here it is.
Bill, I was very curious when I saw how Warren Buffett is positioning. He's holding a record amount of cash. He's holding a lot of treasuries, more than the Fed itself. Does he know something we don't? Is he anticipating a recession? Are we underpricing the possibility of that happening?
Well, I'm not sure he knows anything that we don't know, but he is a very long-term, very patient investor. And I think one thing that we can all agree on going into this election, going into the People's Congress this week, and we still have a lot of other elections in other countries ahead of us, is that there's going to be a lot of volatility. Things are not going to go one way or the other in a kind of a linear fashion. We're going to see a lot of volatility. You've seen the VIX and other indicators of volatility beginning to pick up. So there's going to be opportunities. What volatility means for disciplined investors, and we'd like to put ourselves in that bracket too, is opportunity.
Buffett is concerned about elevated valuations. He says, you know what, he's staying put because there's nothing cheap out there.
Especially in his home market, right? Especially where he has most of his
So how much
investments.
correction do we need to see, and how much correction do you think is coming?
It's very, very difficult to say.
Put a number to it, Bill.
I honestly, if you look at the US market, again, does it make any sense to talk about the S&P 500 index? Because you've got 5 or 6 stocks that have driven all the returns on that index. So shall we talk about a correction in those stocks? Or should we talk about a broader correction? Should we talk about a rebalancing of that? Same thing in treasuries. You know, what can we expect to see there post-election? If you remember last time around when Trump got elected, the initial reaction of markets was in what turned out to be the wrong direction. Are we going to get a similar effect this time? So I think you're going to see moves. I think you're going to see a lot of volatility, and you've got to be ready to act.
Be ready, be nimble, be agile. Bill, thank you. Bill Maldonado, CEO of Eastspring Investments. In the market, we're keeping an eye on oil. We're keeping an eye on crypto, of course. We saw how crypto had a massive run in anticipation of a Trump win. In terms of Brent crude, currently up by 1.5%. New York crude also in positive territory. In terms of Bitcoin, pretty flat at 69,000. Coming up, we'll speak with American University professor Allan Lichtman, who's sometimes called the election Nostradamus. This is Bloomberg. Welcome back. You're watching Insight. Now, here's a quick look at where markets stand right now in terms of Chinese markets. Investors pretty focused on that NPC meeting this week right through to Friday. Will we see what markets are anticipating, that 10 trillion yuan stimulus package. CSI 300 in positive territory, up 0.7% right now. Other benchmarks also in the money. HS Tech, take a look at that, up by more than 1%. In terms of the other markets in Asia, MSCI Asia Pac, ex-Japan, currently up by about 0.9%. Japan on holiday. While relations between the U.S. and China have faced multiple challenges in recent years, and both Republicans and Democrats are signaling a tough stance towards Beijing. Our chief North Asia correspondent Stephen Angle looks at how the U.S. election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that United States influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Angle, Bloomberg News.
Well, when it comes to predicting U.S. presidential election results, few people can rival the track record of Allan Lichtman, a professor of history at American University in Washington. He developed the keys to the White House system, a checklist that weighs the chances of the incumbent or challenger taking the prize. He's correctly called 9 out of the last 10 elections since 1984. And Allan Lichtman joins us now. Allan, good to have you with us. You first predicted a Harris victory back on September 5th, and you've maintained that prediction. Why, when most people think it's too close to call?
Because my prediction system is unique. It rejects the pundits. They're buddies of mine, but they have no scientific basis for their prognostications. They have no track record of advanced prediction. And by the way, don't give any credence to anyone who claims they can predict elections without an extensive track record. My model has been essentially right, and I can argue it was even right in 2000, the one people think got wrong, because I proved in my report to the U.S. Commission on Civil Rights that Florida messed up, that Al Gore should have won Florida going away, but for the rejection of black ballots. But historians will be debating 2000 forever. But essentially, I've been right since I predicted Ronald Reagan's re-election in April 1982, when 60% of Americans thought he was too old to run again, and his approval ratings were historically low. That was the first of many times I made predictions against the polls, including in 2016, when I predicted a Donald Trump win, which did not make me very popular, in 90% plus Democratic Washington, D.C., where I teach at American University. Right. But
Allan,
what makes the keys? Yeah, go ahead.
Talk us through the checklist.
Yeah, the keys are different than anything else because they gauge the strength and performance of the White House party. In other words, the fundamentals, not the fluctuating polls or punditry. And here are the 13 keys. They're simple, integral parameters. Mandate based on U.S. House elections. Incumbency, contest for the incumbent party nomination. Third party, short and long-term economy, policy change, social unrest, scandal, foreign/military failures and successes, and only two keys have anything to do with the candidates, asking whether, and they're very high threshold keys, asking whether the incumbent or challenging party candidate are one of those once in a generation, across the board, transformational, inspirational candidates like Franklin Roosevelt, the Democrat, or Ronald Reagan, the Republican.
Allan, what are the chances you could be wrong? You say don't pay attention to the campaigns of both candidates, but given how tight the race is, that 1% undecided will probably refer to the campaigns of the two candidates before deciding.
No one, I repeat, no one has a successful track record of predicting elections by looking at the campaigns. That's an illusion. Based on the campaign, Hillary Clinton should have won on a landslide in 2016. She won all the debates. She raised more money. She had more ads. She had a better organization, but she lost. You know, did John Kerry run a worse campaign than George W. Bush? He also won the debates against that very bad debater. Did Hubert Humphrey run a worse campaign than Richard Nixon in 1968? No way to tell. That's why I look at the fundamentals. And this idea that this race is undecided or close is based upon the misleading polls that led, virtually every pollster and pundit down the primrose path of error in 2016. The most eminent compiler of polls, the Princeton University Consortium, one of the great world universities, gave Hillary Clinton a 99% chance of winning. And I stood by my call of Trump. And by the way, I got a note after the election which said, congrats, good call, and in big Sharpie letters signed, Donald J. Trump.
Allan, your checklist does not include the possibility of influences from people like Elon Musk, for instance, the biggest donor for Trump, and he controls the social media, X at least, and he does wield a lot of influence. I mean, might your checklist perhaps be missing out on some of the other aspects which may be influential?
Well, my checklist is not just made up. As I said, I've been successful in predicting for over 40 years. No one else has a track record like that. And retrospectively, I developed the keys in 1981, looking at 1860 to 1980. And in 1860, we had no automobiles, no planes, no radio, no television, no polls. Women couldn't vote. African Americans were enslaved. Many demographic groups, like my ancestors from Eastern Europe, weren't here yet. We're an agricultural economy. So the Keys have endured enormous changes in our society, in our economics, in our demography, in our politics. That's why I don't sway and change them in response to what people say, oh, this year is different. For example, in 2008, the critics said, you got to change your keys. America's not ready to elect an African American. Of course, if I'd listened, I would have been wrong. And in 2016, people said, oh my God, after the Access Hollywood tape with Trump bragging about sexually assaulting women, got to change your prediction. He's finished. I didn't. I stuck with it. And I am right. I was right then. You can't change a model based on 160 years of politics on the fly based on what critics say.
You talked about being worried when it comes to the fragility of democracy. Why? We're talking about a country that stands for democracy, possibly the biggest democracy, it says, in the world.
Democracy is precious, but like all precious things, it can be destroyed. Throughout most of human history, we had no democracy. The first golden age of democracy was right after World War I, when we had about 24 democracies. That was cut more than in half by the 1940s. Then in the late 20th century, we had the second golden age. But throughout the 21st century, democracy has been drastically on the decline, mostly from within. And that's what I'm worried about this time. After all, we had Donald Trump in 2020 doing everything in his power to impede 200 years plus of the peaceful transfer of power and trying to steal an election by illegal means like fake electors and violent means like a coup on the Capitol that resulted in 140 police officers injured and several deaths directly or indirectly. He has made it clear he's going to try to do that again if he loses. He said he's going to use the military against his own people, who he said his enemies domestically are worse than the murderous Kim Jong-un, who machine guns his political opponents. He said he'd be a dictator on day one to drill, drill, drill. Well, drilling doesn't take place overnight. It takes place over months and years. And no dictator in the history of the country who's been a dictator on day one has ever voluntarily relinquished power. So you can see, both historically and what's going on right now in America, something we've never seen before, I am perilously worried about the future of our democracy. Democracies die, unfortunately, from within.
Allan, I want to talk about your Twitter account. You tweeted recently about how Trump seems to be invoking violence. And I'm just going to read what was said, that to hit Trump, he says that the gunman must shoot through the fake news. What do you make of what Trump said?
It's absolutely chilling. And this comes on the heel of other invocation of violence, saying because he disagrees with Liz Cheney on foreign policy, she should be subject to a firing squad of 9 guns shooting at her face. We have never heard that kind of invocation of violence from a presidential candidate before. It's fair to criticize her, but not to invoke violence. Same thing here. He seems to be perfectly okay with murderous violence being directed against the press corps because he doesn't like the press corps the way they've covered him. Of course, he can criticize the press corps, but he can't invoke violence, and he has been doing that for years, and it's extremely chilling, and to an extent, I've been a recipient of that. I have never before, and I've been doing this for over 40 years, experienced the kind of hate that's been heaped on me this year. I have had hate heaped on me that is scurrilous, anti-Semitic, vulgar, violent, and directly threatening, including death threats. I have had the security of my family compromised. I have had to alert the police. I've had to take strong protective measures. Before the advent of Trump and his casual, constant evocation of violence and his dehumanizing of his political opponents, I've never seen anything like this. And remember, I predicted Trump in 2016. My predictions are totally nonpartisan. I predicted Reagan. I predicted the two most conservative presidents of our time. But now, because I'm predicting Harris and, Trump and his allies don't like it,
right.
Look at the hate that's been heaped on me.
Allan, you're predicting a Harris victory. Does your model perhaps show any indication of how close that fight might be?
I wish I could tell you that, and it doesn't. I just predict winners and losers, so I can be proven wrong. That's why, having done this for over 40 years and being 77, I still have butterflies in my stomach, or I'd say this year, even crows in my stomach. But the pollsters, they just give you these meaningless probabilities. So Nate Silver says in 2016, depending on the time of day you check in, he has a 70 to 80% chance that Clinton's going to win. Then when she loses, he says, see, I told you she had a 20% plus chance of losing. Well, if you can't be wrong, you can't be right either. Then we've had some other wannabe pollster by the name of Thomas Miller, whose model is based on these crazy prediction markets and which are driven by the polls. And he's swung just in a very short period of time from predicting a Harris landslide to predicting a Trump landslide. And God knows where his prediction stands now, that the prediction markets have moved away. The keys are the North Star of prediction. Unlike these poll-driven predictions or prediction market predictions, they stand firm and can be falsified. The others have no value whatsoever because they're all over the map.
Are you 100% sure, Allan? I mean, what's the risk you could be wrong? Remember, right after Biden's failed debate, you did insist that he should be still the candidate.
Yes, I was very critical of the Democrats for openly and viciously trashing their incumbent president right out in public. I've studied politics since the founding, and I've never seen anything like that. It was awful. I also thought they were headed for disaster by pushing out Biden and losing my incumbency key, but also having a party brawl and losing my party contest key. No White House party since 1900 has ever won re-election when losing both the keys. But maybe they listened to me, but at least the Democrats grew a spine and a brain and united behind Harris, avoiding the loss of that second key. I never said that if Biden had stayed in, Biden would have won. Who knows what might have happened? All kinds of things could have changed. I didn't issue my prediction until September 5th, deliberately in advance of the so-called pivotal Trump-Harris debate, to bring forth my big message that it's governing, not campaigning, that counts. But by that time, of course, Harris had been the candidate for some time and may have positively affected some of my keys, like the third party key, since voters didn't have to choose between two old white guys anymore. Hate to say that, being an old white guy. Or the social unrest key, since the protests were directed against Biden, and he's now in the background.
You're a registered Democrat. If you're right and Harris does win this election, what would you like to see from her?
I would like to see a firm commitment to democracy. I think that is most important. I would like to see her reach out across the aisle. You know, our great presidents have been able to reach out across the aisle and get something done. I'd like her to take decisive action on climate change. Look, if we don't solve climate change, nothing else is much going to matter because this planet will become very dubiously livable. I would love to see her take strong action on reproductive rights. I'm a strong believer that women should control their own bodies and not have their reproductive decisions be dictated by politicians.
How about in terms of foreign policy? Would both candidates, Trump and Harris, take perhaps a tighter approach when it comes to China, for instance?
Well, I'm not an expert on China policy, and both parties seem to be pretty much anti-China. But there is a fundamental difference in the foreign policies of Trump and Harris. Trump is a believer in America first. He has trashed NATO. He doesn't believe in the collective security that's kept America safe since the end of World War II. He kowtows to dictators like Putin and Kim Jong-un. His great model for governing is the dictator Viktor Orban, who has, also sidled up to Putin and snuffed out the opposition and the free press in his country, Hungary. I think Harris has a very different approach. She is a firm believer in collective security and a firm believer in standing up against Vladimir Putin's attempt not just to conquer Ukraine, but to reestablish the Soviet empire and threaten our NATO allies, and in the end, threaten American security.
Allan, thank you so much for your time today. Allan Lichtman, Distinguished Professor of History at American University. He's putting all his money on the line, betting that Harris will win. Well, still to come, a look at how trading desks worldwide are preparing for what could be a long and volatile U.S. election. More from our big take next. Keep it here with us. This is Bloomberg. Well, suffice to say, traders are gearing up across the world to take on wild market swings on U.S. election night. That's the subject of today's Big Take, and Avril has more on this. It does seem like, it is brace, brace, vol, vol.
Yeah, I think that is certainly what traders are gearing up for. I mean, what else can they do except to kind of embrace what could be a really wild night? I mean, we were having this conversation earlier on in the program about how the positioning in the markets now is really so-called Trump trade. So whether you're looking at stocks, bonds, dollar, gold, am I missing anything? Crypto, they're all bracing in that direction despite some of the unwinding that we're seeing today. So, it's really about how quickly traders are going to be able to either pile in on those bets further or unwind them as the night progresses, or maybe days or weeks go on. And we hear from the Big Take, right, that our Bloomberg Newsroom colleagues have been putting together today, showing us how the likes of JP Morgan, they are getting ready to increase staffing from Europe to Asia. It's really an all hands on deck kind of situation. Goldman Sachs, I think, is getting some of its sales and trading desk members on standby, ready to be deployed if needed. So this is what we're seeing.
Well, some say that it is mud wrestling blindfolded. Oh my God, really? But what are the scenarios they're actually preparing for?
Yeah, there are a number of permutations that I think the modeling has already shown, but the one that I think is the most concerning for markets is if we see an uncalled election. You remember how, given this time around, the Fed decision is coming 2 days after polls close. The longer this drags on, the more uncertain it is to perhaps decipher what exactly is moving the market. So that's going to be a key concern. And then, of course, you also have traders kind of bracing for the risk, however remote, that we see civic violence. So these are the concerns for market participants. And of course, if you think back to, say, 2016, as the results became clearer, we saw U.S. futures crashing, then recovering. 2020, when the election was eventually called, we actually saw trading volume surging to 6-month highs. So against this backdrop, what we're really seeing is how stock markets have been pretty calm of late, but stock options volatility, that's been creeping higher. So it tells you what they're hedging for.
All right, Avril Hong, thank you. Before we go, here's a look at our guests for tomorrow. We'll get more market insights with JP Morgan's head of APAC Equity Research, James Sullivan. That is it. This is Bloomberg.